I have no idea what the price is going to do in the short term. I mean, I think I have a $250,000 end of year price target.
Is that still your price target?
I think we could double going into the end of the year. My concern is, okay, well, from a political standpoint, a lot of this depends on Senate confirmation in the United States. And if you look at Stephen Moran, which is the most recent board governor confirmed by the Senate, it was by one vote. So it's very, very tight for Team Red Republicans to get their people through.
Team Red.
And so I am operating under the assumption that Team Red loses to Team Blue in November 2026, both the Senate and the House possibly.
Yeah, Mamdani is certainly giving us
which means that if Trump has anyone who needs to be approved on any of these supervisory or boards, it better happen before then. And so my thesis will be more validated if, obviously, Jerome Powell will be off the chairmanship in May of 2026. How do the elections go with these board governors and the district banks? Can he get Cook fired by that point? And so once he gets all these pieces in place,
Arthur Hayes begins by making a bold claim that goes right to the heart of the modern financial system. When fiat money burns, Bitcoin prospers. According to him, the rise of cryptocurrency is a direct response to governments saturating the global economy with printed money. The purchasing power of average people declines each time central banks increase their balance sheets and add trillions to the system. Savings depreciate, wages stagnate, and living expenses increase. When that occurs, people naturally go toward tangible assets like gold, real estate, and these days Bitcoin, which is the hardest of all. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Our bags perform well when there's more fiat created. And we have a small asset. It's fixed supply asset Bitcoin, and obviously there's other cryptos. Fixed supply asset, we have this gargantuan amount of fiat that has been created and will be created. The faster that goes, the more people run to Bitcoin and crypto. And so if everyone believes that, okay, Trump's got control, you listen to what Buffalo Bill Besson says on television and in the print, and he talks about how they want to revitalize America and they want mortgage rates to come down, and everybody gets a house, everybody gets a car, everybody's got a nice job, all these things, but no one pays any more taxes. So everybody's got this new amazing life that they didn't have to pay for because there's magic money coming out of the sky provided by the Federal Reserve and the U.S. Treasury. Then our job as investors is, okay, well, we know that if you earn a salary, you're fucked, right? You're just going to not make ends meet. So then what do we have to do? We have to find a way to get some sort of financial asset. And previously it was like gold and stocks, right? Before crypto. Now we have crypto, which has been the best performing asset class, Bitcoin, I'm talking about, in human history, when you talk about the amount of fiat that's been created since 2009. So, okay, I need to save some fiat. I need to buy some crypto. Hopefully it goes up as there's more fiat created. I know that my salary is not going to go up as fast as dollars, yen, euro, yuan are printed, and that's sort of the game at the end of the day of what we're trying to do. But at the end of the day, we don't care as crypto holders because we know the math. We know that the debt load will go faster. And what did people do in history? Either they do some sort of debt jubilee. So the American political class could say, okay, we're just going to cancel all the debts. We're not going to pay back to foreigners. But we're not going to pay back people and asset holders as well. There's costs and benefits to doing that. Or we're going to inflate away the debt, right? Run QE for poor people and get the debt to GDP down. That's what they did after World War II. That's also an option. So there's different paths, but at the end of the day, you don't want to own bonds. And if you have the ability, you want to be selling dollars and owning a hard asset like Bitcoin or gold. When you have $35 trillion or whatever, $20 trillion of marketable debt, and you're not growing as fast as your interest payments, then mathematically you cannot escape that. I don't care how many stable coins you have. Like, great, de-dollarization was slowed. But, if I'm Saudi Arabia or China or Japan or Germany on a net basis, I don't really want to own a treasury. I want to own gold, or I want to invest back in my own country because I have to be accountable for my people for this change in the architecture of trade. Cool. It's great that you got a bunch of poor people around the world to have a dollar, and maybe that's a few trillion more, and they buy some T-bills. But they got to refinance it every 3 to 12 months. Right? It's not the end state that you want to be in. And especially if your debt load is growing faster than your economy, like exponential math doesn't give about anything else but exponential math. Yeah. So I have no idea what the price is going to do in the short term. I mean, I think I have a $250,000 end of year price target.
Is that still your price target?
I think we could double going into the end of the year. My concern is, okay, well, from a political standpoint, a lot of this depends on Senate confirmation in the United States. And if you look at Stephen Moran, which is the most recent board governor confirmed by the Senate, it was by one vote. So it's very, very tight for Team Red Republicans to get their people through.
Team Red.
And so I am operating under the assumption that Team Red loses to Team Blue in November 2026, both the Senate and the House possibly.
Yeah, Mamdani is certainly giving
which
us
means that if Trump has anyone who needs to be approved on any of these supervisory or boards, it better happen before then. And so my thesis will be more validated if obviously Jerome Powell will be off the chairmanship in May of 2026. How do the elections go with these board governors and the district banks? Can he get Cook fired by that point? And so once he gets all these pieces in place, then I think it's going to be crazy. And that's the time.
Okay.
Because then, obviously Besant's on board. Then you have the Fed. Now you have control of the banking regulations, so you can deregulate the banks. You have control of the mortgage market. So there's, I don't know the amount, but there's like something single digit or tens of trillions of dollars of home equity locked in American homes. And if you lower the rates, they're going to spend the money, especially if the federal government is underwriting these loans. So the housing market could be used to juice things even further. Again, you need control of certain agencies to be able to do this. I think by mid 2026, if we're going to get this money printing bonanza, Team Trump needs to have gotten all the people in place.
Yeah.
Because post then, I think it'd be very tough for them to, beat the Democrats just because people don't like him. Half the country hates Trump. And so what?
Right.
The thing's in the other direction.
Hayes also cautions that the cryptocurrency business is on the verge of a corporate war. He draws attention to Binance's aggressive strategy of backing initiatives like Hyperliquid in order to crush competition rather than work together. Binance could simply respond, according to Hayes. Let's see how long you endure by taking that to zero. It's a ruthless strategy. Eliminate fees, create buzz, introduce new currencies to the market, and eliminate competitors before they can expand. According to Hayes, a full-scale liquidity war, including strong competition between big exchanges, tokens, and protocols for the same small pool of speculative capital, is what the future holds. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
I read an article this morning, something like the market value of U.S. debt, assuming that it's there, something like $1 trillion. So, the Congress in the United States decided to revalue the gold to whatever it is, $3,800 an ounce. Then there would be $1 trillion deposited with the Treasury, and they could go do whatever they wanted to do with that money. So that's essentially a devaluation of the dollar. And obviously, you could imagine that there could be a lot of market stress because that's the United States government admitting that the dollar is not really worth this much money. And so if you own a treasury bond, like a 10-year, 20-year treasury, what happens to that market? Does the 10-year still trade at like 4.14% or whatever it is today, or does it trade up to like 10%? Or does it cause some market dislocation? So I think there's a lot of unknowns in terms of how the market, specifically the U.S. Treasury market, reacts to the emperor admitting they have no clothes, right? Which is what would happen if you did this massive devaluation. Yes, the Treasury gets this great one-time accounting gain of $1 trillion that they get to spend on different sorts of things, but it's the United States admitting that the dollar is not worth that much.
I see.
And so again, who knows? Maybe nothing happens, maybe something happens. And I think that's what probably gives Besant and Co. pause. This is probably the last option that they like to pursue in terms of what they would do with the market. And unfortunately, the United States doesn't mine that much gold. China mines lots of gold. They would love this to happen, right? Because the Chinese people have been loading up on gold since 2008. They've, encouraged by the insurance companies, by the banks to go, instead of, if you don't want property, you don't want stocks in China, okay, you can buy some physical gold. And we're okay with that as a Chinese government because it's real wealth to us. And we believe that the United States at some point is going to have to admit that the dollar is a piece of trash and do some sort of massive devaluation. And that massively helps the yuan because the Chinese people have so much gold. So again, there's a lot of geopolitical market questions around doing this. So I think it's a last resort for them.
Got it. Okay.
Once you have a stable coin and now you've got a dollar bank account, if you're not an American, now you got a dollar bank account. What do you do? Okay, well, I want to earn Fed funds, whatever it is, 3, 4, 5%, whatever it ends up being. Okay, I've done that. Okay, cool. All right, so more inflation. Got to do something else. All right, so what else can I do? Oh, there's this thing called Athena. It's an endogenous yield in crypto. It's usually about 2 to 3x, what you get in treasuries. Okay, cool. I can make it 10, 15%. All right, what's next? Oh, I want to go, buy coffee at 7-Eleven. Oh, we'll take your stable coin and, we'll let you spend it offline and using Etherfi and other solutions. Okay, cool. All right, well, I'm still broke. I'm making 10% on my money. That's great. I'm making better than the bank. I'm not getting depreciated like I was in Argentinian peso or something like that. I've done well. I need to make more money. Okay, I'm going to speculate. So now I'm going to go to Hyperliquid or whoever the dominant DEX is at the time, and I'm going to trade, I don't know, Dog with Hat, Pepe Coin, Bitcoin, trade. I'm going to speculate on everything with high leverage because it's the only way that I can escape this drudgery that is working for a fixed salary that doesn't increase as fast as the amount of money that's being printed. And so I think that's what, it's very sad situation that the world is in, but this is where anyone who doesn't have financial assets finds themselves is, okay, the only way out is to speculate. And now I have this new way of speculating that's outside of the stock market, which, is intrinsically rigged against me. You might say crypto's rigged against you as well, but I say that there's more opportunity to trade whatever you want, however you want in the crypto space versus in the domestic stock markets around the world. And so now people can say, okay, I've got these stable coins. I literally just connect my wallet and now I have this whole, ecosystem in front of me where I can trade these things. I can lend these things. I can borrow against these things. I can do all these different things and hopefully outpace this inflation that's being generated by the powers that be. People love hype because they know that hype makes money and therefore they buy back their token. Well, I'm assuming that CZ is backing us, or you tell me you're probably more on Louise in this than I am. Let's assume he is, right?
Yeah, he's an advisor.
Why would he do that, right? Well, Hyperliquid, the more successful Hyperliquid gets, the less successful Binance is. So Binance makes so much money. And so they say, okay, well, you only exist because you give 97% of your revenue back. So let me take your revenue to zero, see how, adamant your community is to use this solution versus mine that's a zero fee. We're off the same product. It's not like there's not that much difference in the perp decks. Yeah, you could say, well, latency is this or that, but retail people don't give a fuck. I give you Zia free. I give you a new shiny token to trade in the BNB ecosystem. Look at what I've done to all these other shit coins, regardless of whether they're value or not. And so, okay, hat over to you, Hyperliquid. What are you going to do now that you have no revenue anymore? What's the new thing that you're going to be able to charge somebody for when I'm just going to give this away for free? Because I don't care if Astro makes any money or not. I just want my Binance to stay very, very profitable.
Arthur Hayes is painting a picture of a future in which the distinction between conventional finance and cryptocurrency is entirely dissolved, though not always in a positive way. According to him, stablecoins are enabling global access to the US dollar system without the necessity for a bank. But this accessibility also brings with it new temptations. People will naturally go for larger returns through safe yields, riskier crypto initiatives, and pure speculation once they are able to own digital dollars. It's a reflection of how common people are being forced to gamble in order to survive due to worldwide inflation. This presents a warning as well as an opportunity, according to Hayes. On the one hand, cryptocurrency is quick, open, and global, and it immediately offers people access to financial power. They are, nevertheless, subject to the same volatility, manipulation, and greed that characterize traditional markets. Though it may seem liberating, the emergence of high-leverage trading, decentralized finance, and token speculation may also ensnare people in never-ending cycles of risk-taking. According to Hayes, the world is ultimately about to enter a new form of financial battleground in which large exchanges vie for supremacy, smaller ventures fight for survival, and regular traders attempt to outrun inflation by engaging in cryptocurrency market speculation. The promise of financial freedom and the harsh reality of a society where survival increasingly depends on risk are combined to create a vision of empowerment that is both dangerous and hopeful. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.